good. Things have been going up, but there are these risk factors out there that are kind of lurking that could cause the market to be derailed. There are also people they're debating right now over whether or not there's going to be a recession next year. I believe that there is. I really do. I think that a recession is coming. I'd be stunned if we didn't have one next year. And that's something worth considering. I don't think it's going to be bad though. I don't think it's something to be to allow to scare you or anything like that. But I do think that that's going to happen. And also let's see here. Also Google just lost this big lawsuit that was interesting in terms of their app store. They were basically doing what they call anti-competitive practices and forcing these companies to pay them a fee that was considered to be too high. This is going to be something that is going to be interesting moving forward because now the whole business model of Google has been questioned and challenged, and they're not used to being questioned on anything. So this is going to be interesting. They actually did some weird stuff, like they spent over $1 billion stopping other companies from creating competing app stores. And this is what is considered to be anti-competitive practices. I think Google's still going to be able to make money, but this is the second weird thing that's happened to Google in the last couple of weeks. If you follow AI, you'll know that Google also did something with AI where they released their Chat GPT competitor. And I forgot what it was called. I think it's called Gemini. And they showed a demo video, and they found out that the demo video was fake or kind of fake, right? At least fake enough that it wasn't authentic. And so they kind of took a black eye with that. I think Google though is still on the cutting edge of AI. And also Google's just incredibly good at making money. They did a survey where they found that teen use of YouTube is actually going up, which is in contrast to Facebook and Twitter, where teen use is going down. So I think they're well positioned long term. They also just beat out TikTok with their YouTube Shorts algorithm, where they are getting more views than TikTok, which is a pretty hefty accomplishment themselves. So I think Google long term, if you're looking at solid companies to invest in, companies that I think are going to do well, Google would be in that category. Now the thing about Google too, though, is that um maybe some of these tech stocks are a little bit overvalued, so you may want to wait until that dip occurs. The dip's inevitable. It's going to happen. There's going to be a point where there's maybe a bad week or a month or whatever. Oh, well, that might be your opportunity to kind of get in on some of these good companies at a good price. Nvidia, for example, is an enigma because Nvidia is right on the cutting edge of AI, which shows a lot of potential, but the price is so high, it's hard to know if it's overpriced or not. Do I think it's overpriced? Would I own those shares? I would, but I think it's literally anybody's guess as to whether or not that stock's going to deflate or not. I think it really comes down to the fact that they just don't know how this AI thing is going to play out, how it's going to monetize. I think Microsoft is the best company around when it comes to monetizing AI right now. Like they're just doing a really good job with that. They had that little crisis with Chat GPT, but it was averted. Microsoft is still, they're still moving along. And Microsoft with their Copilot, I think is going to be a pretty epic monetization of AI. That's the question people are asking. This AI stuff is cool, but how are you going to make money from it? Well, the reason Nvidia stock pretty much doubled, and I own a lot of shares of Nvidia, so I was really happy about that. But it doubled because Nvidia was one of the first companies to really monetize AI on a large scale because they were making the chips required to produce the AI, software. So now, though, there are some who believe that the price was pushed so high that it's like too high, that the multiples were set to perfection, meaning that if anything goes wrong, that stock will just crash because it'll sort of correct to its true value, which might be much lower than it is. I personally think Nvidia though is still a great long-term investment, and so the best way to kind of deal with the fact that you don't know if it's going to go up or down is to do dollar cost averaging. Dollar cost averaging is where you pick your assets and you set it and forget it, and you do similar to the $5 a day plan. You just have a certain amount of money just going in consistently. And the way Warren Buffett and Charlie Munger would invest is they didn't look for companies that were overpriced or underpriced necessarily. They just look for companies that had good businesses. Is this a good business or a bad business? Nvidia is a good business. Is Meta a good business? Yeah, I'd say so. I think that they're pretty smart. Microsoft is a great business. And in fact, actually, if you want the list of AI stocks, I assume you've texted the word stock to 31996. If you haven't done that, there's a list of AI stocks there, or you can email support@theblackbusinessschool.com and they can send you the list of AI stocks that I like. It's not a long list, but it may help you. Also, with social media, what's funny though is that there are all these studies being done on how social media addiction is like incredibly high amongst teenagers. I'm curious to see what that does to their mindset and their attention spans. And by the way, if you have a question in the Q&A section, and I'll answer it in the Q&A section. If you have questions about options, if you're in the Prime program or something like that, let's save that for class. If you're in the Prime program, I just sent you all a list of money makers in terms of stocks that you can actually sell options on and generate income from. Anybody who wants to know what we do in the Prime program, feel free to go to drboyceprime.com and you can take a look at the program and see if you'd like to join. It's very good, and it's built around one simple idea. The simple idea is income. That's it, right? So if you're a person that has some extra money, maybe in your 401k or whatever, and you're looking to generate consistent income from it, then what I do for the students is I just show them what I'm invested in, how I make my income every week, and that's literally how I make my money. I sell my options, and then I pay my bills with it. All right, so the next thing is in terms of where the economy is. I mentioned the recession is probably coming next year, but that's my personal opinion based on, reading a lot of stuff and experts and all that. There are some people who believe that there will be no recession. I don't think that's true. I don't think the good times will last forever. And remember, as an investor, you always want to think as a contrarian, like wherever things are, however everybody else is feeling, you want to remember that pretty soon this too shall pass, good and bad. When you see the markets going up, you know that this too shall pass. Eventually it's going to start going down. If you see it going down, this too shall pass. You know that it's going to start coming up. So you want to start preparing for the next stage. So one thing that could be done to prepare is remember put options. If you buy put options on your stock, that protects you from a downside dip. So maybe you go in your portfolio, you have the stock that's been growing. Maybe you go buy some puts, in case things reverse, right? Get a little bit of insurance. Basically, job growth though is just through the roof. They did the growth numbers and they were much higher than they expected, and so the economy is really really strong. Now the question is not whether or not the Fed is going to stop hiking interest rates. Everybody believes that they're going to stop, which is good, right? They're just going to stop the beating. This is why you saw Bitcoin really rising. I'm a big believer in Bitcoin. I think, that's another good money-making strategy. I mean, think about this. I think I showed you guys last week. If you had just bought a little Bitcoin and just consistently invested, in Bitcoin back in 2018, you'd have an insane amount of money now. Like if you just literally put the same amount of money that you might spend on fast food and you just kept buying Bitcoin consistently at about that same level, maybe $20 a week, $50 a week, whatever you could afford, that would have turned into a lot of money. Right. And it's not a hard strategy. It's very straightforward. Anybody can do it. And I believe Bitcoin, though, still has a lot of ways to run. Every indicator I see with Bitcoin tells me that it's going up. I will be stunned. The only thing that can stop Bitcoin's growth is the government. And that is a factor. If they don't regulate it properly and they decide they just want to kill it, then obviously that would be an issue. But assuming they don't kill it, Bitcoin is built for growth. They're going to do what they call the halving next year, which halving. They're going to cut it in half and the supply in half, not the supply. I apologize. It's not the supply. They're going to cut the rewards in half for what the miners receive for mining Bitcoin, which is going to reduce the supply. When that happens, everything in my blood tells me that price is going to go up. Like I really like Bitcoin. I know that I'm putting my money where my mouth is when it comes to Bitcoin. So job growth is strong. The Fed is likely going to stop hiking interest rates, which is going to provide some relief in a lot of areas, real estate, stocks, everything else. The big question now is when is the Fed going to actually do the opposite of what they've been doing? When are they going to start reducing interest rates? And so if my expectation of a recession next year comes true, then the Fed will start reducing interest rates, which creates this awkward outcome where you might find your stocks going up when the economy is going south. So as soon as the bad news starts arriving, the Fed comes in and they have this sort of belief that they can control the economy in very unnatural ways. So they're going to come in, and reduce interest rates. And when they do that, your stocks will soar. So keep that in mind. And so what I want to do now is I want to answer a few of your questions so that I can make sure I address some of the thoughts that you guys are having today. All right, so let's see. Good morning, Doc. I opened up a Roth IRA for my three girls. You mentioned $1.33 stock ELDN, and my oldest didn't think it was a good stock because it was once over $2,000 at one point. Could you please let me know how this stock projection came about? I plan on buying 100 shares to $500 worth of ELDN. They got their first jobs. Okay, so first thing I'll say too, I do know that stock, and I did buy some shares. Basically, here's the thing: when you talk about buying a stock and picking the stock, first of all, it's not an exact science, right? So we all know this. We know that that literally when we're picking stocks, it's sort of doing the best you can based on the information you have. So based on analyst reports, ELDN is a company that many analysts expect to go up. That's the first thing, right? But remember this: I'm not sitting around checking my watch waiting for ELDN to get me out of the projects or to save my life or to make my life better or to take me to the next level or make me rich. I literally own hundreds and hundreds of stocks. So the way I invest is I consistently go look at analyst reports, say, oh, that looks nice, let me invest there. Oh, that looks nice, let me invest there. So don't, in my view, I would not ever put so much money in one stock that you're crossing your fingers hoping that that one stock is going to sort of make the difference in your life. ELDN, in my opinion, or any other stock, should be one of many investments that get made. And so you are right. It is a fallen angel, but and that leads to my second point. Sometimes the companies that are the most distressed can be the best investments in your portfolio. And sometimes the companies that are doing the best can be the worst investments in your portfolio, because sometimes good companies get overpriced and bad companies get underpriced. So what moves the stock price is not just how great the company is. It gets moved by whether or not they improve their situation. So you look at a company like Macy's. I put Macy's up here. Macy's is having some financial trouble. They're getting a lot of competition from e-commerce, big box stores, and all that. If you look here in the last 6 months, last 5 years, Macy's stock has dropped 35%, right? So a lot of value has been lost by investing in Macy's stock. Now, what I want you to look at, though, is look at the last 6 months of Macy's. It's gone up 22%. Look at the last 5 days. It's gone up 19.35%. This is due to some rumors about a buyout. Companies thinking about buying Macy's assets because they like the real estate of that flagship location they have in New York. And so if somebody bought Macy's stock this week, they would have made a lot of money, right? Or if they bought it even 6 months ago, they would have made money. Year to date, it's only up. It was actually down 1.89%. But the last 6 months, the last month, you see that 83% in the last month. So what turns red can be green. What turns green can be red, depending on the perspective that you look at it for, right? So ELDN, your daughter could be right. That stock may not be one that does so great, but let's take a look here. Let's look at ELDN now. Last 5 years, let's see here. This company has gotten his butt kicked. It's dropped 97.5%, right? Let's see. Let's look at the last 6 months, down 26%. Last month, though, up 10%. Last 5 days, kind of flat. Today, it's up a little bit, right? So this is a company I picked based on what analysts are saying that they're seeing in this company's future based on what's happening right now, right? So when they look at a stock and they decide, okay, this stock could be a good investment, sometimes they'll look at the fallen angel and say, okay, this company has fallen quite a lot, but if they can survive and not go into bankruptcy, this may become a great investment. And also remember this: it's a pharmaceutical company. So pharmaceutical companies, I would not be overinvested in pharmaceutical companies because they have a lot of jump risk. Jump risk is the risk that the stock can just jump from $1.33 to $50 just like that, or it can go from $50 to $1.33 based on the result of a clinical trial. So maybe one way to balance the portfolio is to say, okay, yeah, we're going to invest in some of these riskier assets, but also let's look at some more mainstream companies as well that will give us that more consistent, more steady return. Okay, so ELDN is basically, if you got that from that list, what Dr. Boyce is buying that I share with all you guys that are in the Black Stock Market program, that list is basically literally what Dr. Boyce is buying. That's literally what either a stock that I just bought or a stock that I would buy if I hadn't used up all my extra money that week or whatever, right? And so effectively, it's not investing advice, but at the same time, it's not a guarantee because all the research shows that really it's very difficult to predict what an individual stock is going to do. So I don't try to do that. What I try to do is make sure that I'm making solid bets consistently, so that over the course of several hundred different stocks, they're gonna do well. So I would not. So maybe one general rule could be one similar to what mutual funds use. They don't put more than 5% of their money in any one stock. They don't put more than so if you're investing for your girls and they've got $500, maybe you buy 3 shares of that $1.33 stock and just say, okay, we own that. So if it takes off, we're going to do great. If it doesn't, then maybe something else will. But I would not put too much of my money in any one asset or pay too much attention to any one stock. It just doesn't. That's not a good long-term strategy. And a lot of people get burned that way. Okay. So let me see here. Next question. Doc, would you advise NVIDIA now, especially if it's going to split? Um, you know, I would probably feel more comfortable buying more shares of NVIDIA after a pullback. You've had so many good days in the market that I anticipate that you're going to have a bad week very soon. And when you have the bad week, that might be a chance to get in. NVIDIA is, I think, a good long-term investment. Dollar cost averaging is a good way to keep you from having to keep guessing. What you're talking about is market timing, like sort of picking the right stock at the right time or buying it when it's low and selling it when it's high. That's really hard to do. I wouldn't even try to do it. Let's see here. If you invest, Timothy and Janae say, if you want to invest in your kids for the future, it's better to do it in an account in your own name or in their name. I would keep it in your name because I don't think kids should have control of large amounts of money at an early age. Their brains are not fully developed till they're 25. And for some kids, they don't even become responsible till they're 35. So, and they may not even need the money till they're 45. I mean, you don't know, right? So I don't think you have to just sort of, turn to a 15-year-old and say, here's $100,000. I don't think that leads to good outcomes, to be honest with you. What type of account would you recommend? I think an account that's just simply in your name, maybe it's part of a trust, possibly, where they're the beneficiary of the trust. That might be a good model. That way the money is protected from outside forces and it's also protected from them. So you sit down with somebody that can set up an estate plan. We're going to do some estate planning stuff in the Black Business School soon if you guys want to participate in that. But basically get somebody that can set you up an estate plan. And I think some basic rules that you might want to put in place would be with the estate that they can only get a certain amount. Maybe it has to grow and they can only have the interest, so they can only take more than, no more than 5% out per year or whatever you want to do. And then also, and I'm thinking about the trust is protecting from a couple things. One, protecting from things like lawsuits and stuff like that. Number two, protecting the money from your child and irresponsible choices. And then three, making sure that they get taken care of in case something happens to you. And I also don't believe you have to tell them that the money's even there. I think if you sort of give them all this money when they're young, I think it takes the fun out of life and it can kill their ambition. So, and I think keeping it in your name makes sense. I think you should maintain control and power for as long as you can, because you don't want your child to do something stupid and then they say, well, I don't have to listen to you because I have $200,000. I don't think that's a recipe for success. Debt first or invest and generate first. I think you could do both. I don't think paying off all your debt first before you invest is a safe strategy because think about this, right? If let's say I got 10,000 in credit card debt and I have no stock, no investments, and I say, well, no, I'm going to pay off all my credit cards before I start investing. So I give all my money to the credit card company. What happens? Well, I put myself in a risky position because now I have no free cash flow, right? Now I have no ability to deal with financial emergencies. If I get stuck in a bad spot, then I'm just going to be in a bad spot, right? Because why? Well, because the credit card company maybe if I'm lucky, they might make that money available to me. But let's say they shut down my account or something. And I say, hey, I need that money back. That $10,000 I gave you, I need it back now. Can I do whatever with it? And they're going to say no. And I think paying off student loans should be one of the last things you do with your money. I believe in paying it off consistently, right? But remember, the interest rate on student loans isn't very high. So if you've got these great investment projects, particularly things that can get you off the plantation and get you in a position where you have a business or whatever, I personally am a believer that Pursuing those things should be done either simultaneously or even before you deal with the debt load, right? And the reason is because life, the years of your life are more valuable than your financial situation. And so what I've seen people do, which I've seen people make plans like this, which absolutely make me sad, is they'll say something like, yeah, I want to start my own business, yeah, I want to invest, but I'm going to pay off all my student loans first, and so it takes them 20 years to pay off their student loans, and so they wasted 20 years of their life maybe doing a job that they didn't want to do, not being happy, right, just to pay off all this debt, to do things that they may or may not be able to do. I mean, for all you know, you could die the day after you finish paying off your student loans, and then you never had a chance to really live. I think a better strategy would be to look at debt as something that should be dealt with very carefully. Interest rates matter in the sense that low interest rate debt is not a horrible thing, right? I'm not saying you should have it. I think student loans, if taken to the two extremes, are very, very bad, very, very toxic. Half of all Black college graduates default on their student loans. That's the number one reason that Black wealth is going down. Is universities have all your Black wealth. That's why Black wealth is going down. Universities are taking that money, and then big pharma is taking the rest. But then you got other forms of debt, right? You got high interest credit cards, stuff like that. There's no real reason to carry a massive credit card balance where you're paying an insanely high interest rate. That should probably be top priority when it comes to what you do with your extra money, because that's a guaranteed return. If I am paying down debt on a 20% credit card, then I'm guaranteeing myself a 20% return on investment. Do you understand? With the stock market, there are very few assets that will guarantee you a 20% ROI, but paying down credit card debt will do that, right? So I would make it my top priority. But remember this, just because something's your top priority, that does not mean it's your only priority. You're not married to that strategy to the point where you must forsake all other possibilities. So you could simultaneously, let's say you have your student loans here, the interest rate's very low, so you say, okay, I'm going to pay this slowly, but I'm going to make the minimum payment because the interest rate isn't that bad. But this credit card debt, that's 20%. Oh, I'm going to start chopping that down. That's my top priority. But then my other priority is financial security by having enough cash flow to help me get through short-term situations. You understand? See, with wealth and economics, you've got at least two things you got to deal with. You got the short term and the long term. It's almost like in football where you got the running game and you got the passing game, right? So you got the short term and you got the long term to deal with. The long term is, long-term wealth, long-term financial security, retirement, stuff like that, right? Wealth building, achieving your big dreams, whatever. The short term is, okay, I need money by Tuesday. Where am I going to get that money? So a good balanced approach to financial security is to factor both of those in and achieve goals that fit all those strategies at the same time. And to some extent, short term can be more important than long term. It's almost like the long term. Imagine if you have two kids. One's named long term, LT, and one's named short term, ST. So you got two kids, ST and LT. And the way it is with kids is you don't necessarily love one kid more than the other, but the kid you give the most attention to is the one who needs you the most at that moment, right? So sometimes your short-term financial needs are top priority. You've got things that you need to do right now, and well, how do you deal with that? Well, that stock portfolio is there for you to be able to solve short-term financial problems. When you do the $5, $10 a day investment plan for your child, that liquid, that 100,000, 200,000 in liquid assets you're going to give them by the age of 22, 23, 24, 25 years old is going to be available for them to literally take care of both of those kids, meaning they're building the long-term wealth because they own these assets that are growing consistently. But then two, if they need to get $500 or $1,000 to pay a bill or to deal with a financial emergency, they've got that covered too. And it's very important to think about both, because people think that businesses go bust because they don't make a profit. And that's not true. Most businesses that die don't die due to a lack of profitability. Most businesses that die, they die due to a lack of access to cash flow. Access to cash flow is not just important, but when you're talking about a business where you constantly got money going in and out, in and out, in and out, in and out, that becomes the most important thing they have to think about. I used to do this long series with Damon Dash, who worked with Jay-Z and Rockefeller and all that. And it was called the Intelligent Boss Moves. And one thing that Dame mentioned that was interesting was he said that we got out of the fashion business because we were selling like crazy. The Rockaware stuff was selling, everybody wanted it, but it was horrible for our cash flow because they would get all these orders and they had to give all these people credit. All the department stores, they had to give them credit for these orders. So they had to come up with the money. They had to go to the bank, borrow enough cash to get all the inventory, to fill all these orders, and then they had to sit back and wait 3 months to get paid. And in those 3 months, a couple things happen. Number one, some of those vendors just don't pay you. And then two, some of them pay slowly. So you've got bills to pay. You've got the short-term cash flow need, right? Your employees want to get paid every week or every 2 weeks, but yet the vendors are saying, oh, we'll pay you, net 30, net 90 or whatever. So to some extent, there's a whole industry built around helping businesses maintain their short-term cash flow needs. So the same thing is true with yourself. So I would, and so part of the reason that I would not just focus solely on paying down debt as the first and only thing that I do is for two reasons. One, because I think you're trading time, right? You're giving up time, which is very important, right? Every year you delay starting that business or pursuing that dream, you're kind of like you're getting closer to death. We all are. I don't believe in doing that. I believe in doing what you want to do as soon as you can, because you're not going to be young forever. But then two, you're putting yourself in a risky position so that if that short-term child needs your attention, you'll have nothing for them because you gave everything to LT. ST is starving now, right? The short-term problems can be like that short-term cash flow need could be the thing that causes you to lose your house because you got all this wealth being built and you're paying down all this debt, but you don't have enough money to get that mortgage payment in on time. Do you understand? So one thing that's interesting too about businesses. I was talking to somebody about this the other day. Let me see if I can organize my thought on this in terms of what I was saying to them. I was talking to them about a business that someone has that I know. I know what it is. That we were talking about. There's actually this race car driver named LeVar Scott, and LeVar Scott is a cool, really awesome 19-year-old young man that I met at the Daytona 500, and he is going to come on to my podcast later on today. I'd like for you all to meet him because LeVar is trying to raise money to do these races, right? And I want to sponsor him. I want to support him because I like the guy, and I saw him race. He's really good. They were just zooming around the track, and he's just a great guy. But anyway, as we were talking about raising the money, I was talking to a friend about it, and we were kind of sort of reflecting on how difficult it is for a guy like LeVar because white guys tend to just have so much more wealth and they get these corporate sponsorships and they can spend millions of dollars on their NASCARs and all this stuff. And LeVar is just, a regular 19-year-old kid from the hood with a lot of talent, but he doesn't have, the financial backing that he needs to get things done. And I said, one thing that's interesting that people forget is that when you talk about most Black-owned businesses, a lot of them don't, so their wealth level and their ability to provide consistent support for the things they believe in, it oscillates because sometimes you'll have a good month, sometimes you'll have a bad month, sometimes you have a good year, then you have a bad year. And when you have a good year, you can do things. When you have a bad year, you can't, right? Well, why is that? Well, because it's really due to one important variable that people don't talk about enough, which is access to capital. And I said, think about this. How has Donald Trump has a jumbo jet with his name on the side of it. To fly a jumbo jet, even on a short trip, would probably cost him $100,000 every time he fires up that jet and goes anywhere. He's had that jet consistently and made the payments on that jet consistently since the 1980s, maybe the 1970s. How did he do that? Well, here's the thing. His business had ups and downs like every other business. There are times where he was $5 billion ahead. There were times where he was $8 billion in the hole. What allowed him to have that consistency of always being able to pay, that $100,000 or whatever it costs to fly that jet consistently over a 30, 40, 50-year period? Well, it's access to capital, right? Whenever he had a financial fluctuation that went negative, he could call the bank and the bank would say, oh, yeah, Mr. Trump, we're going to wire you $100 million so you can make your expenses for this month. You understand? Black businesses don't typically have that, and Black people don't typically have that. Right. So this is another reason why things like that $5, $10 a day investing plan are so important for your child, because if they've got a capital base, then they're able to sort of deal with those fluctuations. They go up and down. And that's why I was explaining to to LeVar. I was like, guys, it kind of sucks that I know people that would love to sponsor what you're doing, but the ability to provide consistent sponsorship, in a volatile business environment is kind of tough to do. And so long story short, here's what I would say to sort of summarize and wrap a bow around that conversation about short-term versus long-term is I believe that before you prosper, you got to survive, right? And part of the reason that I don't believe in giving all your money to pay down the credit cards and the debt first, before you start investing for yourself, is that I want you to survive before you prosper. So survival means thinking about your short-term capital needs, making sure that those are handled, making sure you have access to money, even if it's not your money right away, even if it's debt. At least you're going to have security in that regard. Then you start building that long-term wealth that you're seeking to build. One example I'll use too is I remember I had a friend who told me that she wanted to go to medical school, and she was 24. She was a single mom, and I guess she'd made some mistakes in college. And I saw her; she had a job making minimum wage at Fazoli's. And I said to her, I said, "Well, you're really smart. You used to want to go to medical school. You still going to do it?" And she said, "Yeah, I'm definitely going to go." I said, "Great. Well, it's not too late. You're only 24 years old, and blah 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 blah." And I remember that that then she said something that was really interesting. She said, "Well, before I go back to medical school, I want to pay off my student loans first." And I said, "Well, how much are they?" And she said, $15,000. And I was sitting there, and I was in my head, I was thinking, but you're a single mom who makes $7 an hour. How are you going to pay $15,000? It's going to take you another 10, 15 years to do that. And at that moment, I knew she was never going to go to medical school, because by that time she'd be 39 years old, right? So basically, what I would have wanted her to say is, I'm going to pay my debt, but I'm going to put the debt to the side for now, and even take on more debt so I can invest the more valuable resource I have, which is time, and put that time into going to medical school. And then I'll graduate and I'll be a doctor, and I'm making 15,000 a month. I can pay the debt off in a couple of months. Do you understand? Right. So the where you prioritize your next financial move should really be based on what resources you have in abundance and what resources are rare. And then also the timing in terms of what you actually want in your life. I think that if you have a great business idea and it requires you to have a little bit of debt in order to really pursue it, I don't see any reason to sort of keep delaying things. I don't. I say you go for it as soon as you can. All right. So anyway, let me hop in and answer a few more questions. Rarick says, if a CEO of a company buys a lot of the shares of the company, does it mean anything or not? That's a great question. Yeah, when typically the research shows that when CEOs buy back shares of their own company, the stock price tends to go up for a lot of fundamental reasons. And some of it is what they call signaling. Signaling is where when you see somebody who knows more than you and they make a move, a lot of people make the same move, not because they know it's the right move, but because they follow people who they believe have more information than them, right? So the CEO clearly knows more about the company's trajectory than the shareholders do. So a lot of times when they buy their own stock, it creates confidence in the in the stock from the public. That's why, for example, the first thing that the government does whenever there's a run on a bank is they all come in and they do something to create confidence around that bank. So they'll get other bankers to go buy shares in that bank, or to put money in the bank. Like I think they were trying to save some bank. I don't think it actually worked though, but they got Goldman Sachs and all these other big banks to make deposits in the bank to basically convince people that everything's okay. So the other thing too, though, is from a fundamental standpoint, companies can increase their earnings per share by simply reducing the number of shares that they have outstanding. So stock buybacks are a pretty popular way to give a temporary boost to your stock price, but it doesn't always work. Errol says, "What's your view on the morning CPI and tomorrow's for the Fed meeting?" You know what? Let me see here. Literally, I gotta do a quick Google search on this. Let me see here. Let's see what happened. Okay, inflation slowed to a 3.1% annual rate in November. That's good news. That means that the Fed has achieved its most important goal, which is to slow down inflation. That is really good for the economy. This says Jerome Powell was right. He got beat up a lot, but this guy has been making good decisions. It was a terrible decision before to put us in that predicament in the first place. That's why national debt is insanely high, and that's how inflation got out of control in the first place. But since that time, the rate hiking campaign has really worked. I think they might actually increase interest rates maybe one more time to really get down to that 2% rate. But 3.1% is really good. 2% is their goal. 2% is their holy number. And so I'd be interested to see if they actually push down to 2%. You mentioned international conflicts. What effects do these conflicts have on investing in international stocks? I think it depends on the country that you invest in, but basically war just does bad things for the stock market. It doesn't improve stock prices. It tends to create uncertainty and risk. And anytime there's risk, all the models say that prices go down. And so that's why in my book, The 10 Commandments of Black Economic Power, I talk to you guys consistently about minimizing conflict in your family circle where you're trying to make money together. Like if you start a business with somebody and your business starts making money, I would invest in like some sort of mediation arbitration process or a therapist or something that can work with you as a group to help you resolve your issues peacefully so you don't have any problems. I think a lot of strong companies have like a staff therapist or somebody to kind of help keep everybody on the same page, because the minute you have conflict, you're gonna see a lot of money get lost. All right, so let's see. Rarick says, if you have a stock account for my daughter and is in her name, how can I keep managing her account after she turns 18, or can I? Well, I think the way around that is I wouldn't put it in her name. That's my 2 cents. So my girls, how do I allocate their first $3,000? 3 shares to ELDN, 15 shares to JSTC. Yeah, I like that. I like that allocation. I think that's good. What I really like about it, and I like the fact that you have a mix of mainstream companies, and then you have some companies in there that that are riskier and smaller and less well known, but could actually provide some sort of magical jump in terms of stock price. But then you got solid companies in there: Costco, Walmart, Starbucks, McDonald's. All those companies are really, really good at making money. I'm invested in probably about 60-70% of the companies on that list. So I like it a lot. Let's see. Last question. Any thoughts on JSTC? Is this an index, black managed and possibly owned? JSTC. Okay. There aren't a lot of black owned companies that are publicly traded. Let me see here. JSTC, Adesina Social Justice, all cap global ETF. Okay. Let me share my screen. I can let you all see what I'm seeing here. So it's an exchange traded fund. The market cap is not even listed here. They seek to attract the Adesina Social Justice Index. I don't know what that is. Let's read. Let's click on Morningstar, see if they give us some information. Yeah, there's no data here. Let's see here. Okay, so in Morningstar. Come on, man. Morningstar is giving us no information. It looks like we have to sign up for something to learn more. Let's look at Market Watch. Let's see what's here. 9 million shares outstanding. Total assets 162 million. Okay, that's considered pretty small. Business. I mean, it's one of those. See, okay, now they're blocking me again. It's one of those like, why not investments? Like if it's something you believe in, why not invest in it? But there's nothing special about this company that makes me say, yeah, this is it. This is a great place to put your money. And it's hard. It looks like I can't really get information on it. I'm trying to find out more about it. It looks like it's gone up a little bit lately. Here we go. They seek capital appreciation and income. Okay, that's pretty vague. The fund is an actively managed ETF that seeks to achieve its investment objective by investing the fund's assets in a portfolio of global companies whose business practices are aligned with the social justice criteria of sub-advisor. But the thing is, what I would look for, here we go, top 10 holdings. Okay, Hyatt Hotels. Okay, that's good investment. MasterCard, Visa, Roper Technologies, Aflac, Adobe. Yeah, why not? I mean, these are not bad companies. This is not, there's nothing radical extreme about this. It seems like they maybe listed their mission to kind of attract investors or something, but I didn't know there was something, related to racial justice by investing in Hyatt, but Maybe there is. I don't know. So yeah, I don't dislike it. I really, I think what made me feel like it's an okay investment is the fact that they have so many strong companies in the fund. I always look to see what are your top 10 holdings, and that way you can get an understanding of what's there. It's like if you eat soup and somebody tells you the five big, largest ingredients in the soup, then it tells you what you're going to get. So the holdings are solid. I have nothing against it, and it provides, and ETFs and mutual funds are pretty good because they give you really good instant diversification. So a person can invest in a couple of mutual funds and have that be all that they do. Like literally, like you could pick a couple of, I mentioned Victor Oscar Oscar, that's what we do for the $5 a day plan, or SPY Sierra Papa Yankee. If you do a couple of those and just set it and the money's going in there every week, you really don't ever have to come back to class ever again. Like your wealth will be higher than 95% of all Black people because you simply did the most important thing, which is to be consistent. Like you consistently did. And so I'll end on this point. Basically, when we talk about the $5 a day plan, I'm not asking you to do anything different from what you're already doing. You're already building wealth. You're already making consistent payments to something. You're already making consistent payments to the cell phone company. You're making consistent payments to your car dealer. You're making consistent payments to your landlord or whatever. And so all I'm saying is make consistent payments to your future, right? The same way you're buying a house for your landlord if you're paying rent. Well, I want you to buy a house for your kids by paying it forward, by putting that money in that investment portfolio and just being consistent with it. And don't even think about it. Just set it on auto deposit. And all you have to do is not sell your asset and let time do its work. Just like planting a vegetable in the backyard, all you got to do is plant the seed, make sure it gets enough water, and then time and Mother Nature will do the rest. Money grows just like flowers grow in your backyard, just like you can grow vegetables and stuff like that. Just like you raise a child, if you nurture the child and feed the baby every day and keep the baby safe, the baby's going to grow on its own. And that's how money grows. The big mistake people make with money is they think that money grows like that. They think that you're just supposed to go from a newborn baby to a full grown man in 2 weeks. That doesn't happen. And if somebody says, my baby became a 30-year-old in 2 weeks, they're lying to you, right? And so when you get the impression that massive amounts of wealth can be created very quickly, that's just simply not true. Somebody had to go through the growth process in order to build that wealth that does exist. So a lot of times when we get betrayed and we get tricked because we see some kid who was poor last year and then they get a record deal and they become very wealthy, that wealth process, that seemingly overnight process, and I hate it. It drives me crazy because then they'll go and they'll give speeches to other Black people and say, this is where I used to be, and with hard work and a year of hard work, this is where I am now. That's a complete misconception, because that's not really their wealth. That's not really their money, right? They're benefiting from a process that someone else put in place, right? The company is the founders of the company were the ones who actually engaged in a more natural wealth building process of putting consistent labor and work into building an institution that was capable of signing this person to $100 million contract or whatever. And so what I'm asking you to do for your kids with the $5 a day plan is to be the corporation, to be the benefactor. You go through the long-term natural wealth building process, and then later on, they're able to say, wow, look at this. I've got $200,000 in the bank. But that's because somebody did the work. Somebody made the sacrifice. Somebody took the time and allowed Mother Nature to happen, Mother Nature to take its course. So a good thing you could do now is maybe look at the amount of money you put in your car note and just say, okay, the same amount of money that I'm giving to the car dealer so that his family can build wealth, I'm going to put that same amount in the S&P 500 every month so my family can build wealth just like him, and I'm not going to touch that money. And give yourself at least a decade. After in 8 to 10 years, you'll notice, the money really growing. After 20 or 30 years, it becomes massive. And then at that point, that's where rich people come from. Then at that point, your family's so rich that everybody thinks that you got lucky or you were blessed, but really you'll know the truth. All right. So anyway, all right, I'm gonna go. Do me a favor, if you are interested in getting a calendar, just go to drboycebooks.com. You can hit the link at the top for the calendar. Also, I'm going to do that 30-day financial consciousness training that starts on January 1st. For 30 straight days inside B1 Nation, we're going to meet. And every day we're going to do a lesson. We're going to fill out this journal. It's a book called 30 Days to Wealth and Power, or Black Wealth and Power, actually. And in this book, basically it's a reflective journal, and all it does is it's pretty much lays out a framework and a pathway for you to elevate your economic consciousness. So effectively, we make a plan, you lay out your where you are, you figure out what your where your mindset is, you figure out what your lifestyle looks like, and then you sort of lay out an agenda at the end of the 30 days that will elevate your economic consciousness, so you have an awareness of where you are, an awareness of where you're going, and an awareness of how you're going to get there. And then at that point, we can still continue. I'm gonna still be with you the whole way. So if you go to drboycebooks.com, the course is $2.99, but if you buy a copy of the book, you can come in for free. We're gonna do it every day on our social media platform at b1nation.us. So if you haven't joined b1nation.us, make sure you join, and you can get a copy of the book if you go to 30 days to go to drboycebooks.com and search for 30 days to wealth and power. The book is sold out right now. Yeah, physical copies are sold out, but if you get an e-copy, then you can still join the class. So yeah, we sold out really fast. I'm working with our daughter to get more copies in stock, and we'll do that. But even then, I don't think she's going to have copies in stock until like the 19th or the 20th, and I don't know if she can get them to your house before January 1st. So if you want to just download the e-copy, you can do that as well. So yeah, the other book is sold out. So there you go. All right. So anyway, I hope you guys have a wonderful day. It was great to see you, and I